Welcome to the Finance Podcast. The topic of this episode, the return of Thematics in a broadening market, with Ralf Oberbannscheidt from Robeco.
Und herzlich willkommen. We switch to English. I hope that's okay for everyone, because we also have an audience then online who will probably just understand English, we don't know. So I'm very delighted that at least a couple of you found time to attend our presentation, despite the drinks downstairs, but then I still hope we can have some drinks afterwards. The topic today is the return of thematics in a broadening market. My name is Claudio Carco. I'm the sales manager at Robeco in Zurich. And with me on stage is Ralf Oberbannscheidt. He's the head of thematic investing, and he's the person in our company who deals with megatrends every day. Today he will talk about the interesting topics like artificial intelligence, sustainability, but also demographic changes. But most importantly, he will tell you why now is the perfect time to invest again in thematic products. If you have any questions, we have enough time at the end. Please ask your questions after the presentation. And with that, I hand over to you, Ralf.
Super. Thank you, Claudio, for this great introduction. We thought, what can we tell you about Thematic right now? Where are we at right now? So thanks for coming. Thanks for listening. You will get half an hour of the journey, roughly, maybe a little shorter. Then there should be time for Q&A. If there's any urgent question, interrupt me at any given moment. That's totally fine with me. What to expect? I'll tell you briefly what Robeco's thematic philosophy looks like. What are we dealing with on a daily basis? How are we thinking about thematic? What does it require? How is it different? Dig deeper into this. How is it different? How is thematic investing different from the classic fundamental investing? There are certain hallmarks that one should keep in mind, investing in thematics. Then, as Claudia said, why now? Is it really a transition point that we're in right now? Thematic, people argue over 3 years, performance, so okay. There's alternatives now, yields are up. So we'll look into this, why now could be interesting. And also specifically we call it a broadening market. There's no definition for broadening market, but I have a couple of ideas why now, why the broadening market, and then we conclude the session. Again, interrupt me at any given moment. The way we look at thematic at Robeco is somewhat different. Thematic investing has the reputation of being storytelling, which I think it is, but it's not. That was really the case 25 years ago. People wanted to have something different, and it was the dot-com bubble and everything. We have defined this a little bit differently, and I abbreviate that for you. So we're dealing with problem solving, we're dealing with a process, and we're process-oriented, not just storytelling, and we want to be relevant in the present for thematic. So these are 3 hallmarks that one should consider. Time frame, I wrote it for us, it's more a 5-year horizon, 3 to 5, you could argue. Key is the problem solving. So what is thematic doing? We're trying to solve problems and inefficiencies pretty much around the globe, in society, in nature, science, more lately in geopolitics, but also valuation of services and products, and sometimes even time is valued inefficiently. And usually we deal with problems. We have problems mainly in nature, in socio-demographics, technology transition. So keep this problem-solving angle in mind. It's not just storytelling. There is a deeper meaning behind the themes. Number 2, we're not just short-term hyped media stories in thematic. So we follow a very good, a really good process that merits a longer lifespan of each theme. We constantly monitor the themes and the theme relevance. There's some process milestones that we follow, also with our investors, fact checks, and there is rigorous research behind it. So it's not just, we like theme space. We throw in the 20 stocks that are relevant, and that's it. Deal with that, and we'll see what the outcome is. So we're not rolling the dice. There's really a stronger process behind it. And this is relevant here, present relevant. It needs to be relevant at any given moment. And We follow, with our research-driven approach, we follow this against feedback loops because we're not investing in classic fundamental equity. We invest in companies, but I'll show you that later. We're not investing in sectors, not in MSCI countries or regions. We're really agnostic to that. So therefore, we always have to have a feedback loop. What are we doing against the market? Where's our variant perception at? Keep that in mind. Not just storytelling, but really a dedicated process from solving the problem all the way to double-checking how relevant is that theme today. We manage certain strategies, of course, at Robeco, 12, 13 strategies. They all fall into different buckets that you see here, anything across environment, technology, and society. And then different color codes. The global multi-thematic, as you would assume, invests in all of these. I shaded a little bit in gray the ones that are a little bit broader in nature. So you see here circular economy, for instance, has a participant in each of the bigger buckets. Digital innovation also in 2. And you see on the left really more energy transition, resource management, of course, more environmental focus, then the more tech focus in the middle. And I'm saying not just AI and big data, but the whole value chain of that as well. And then on the right, that's more the society, socio-demographic changes that we experience, for instance, in health and living, but also the new consumer. Consumers face a lot of, not necessarily headwinds, but the problem with the consumer is there's too many choices these days. And then all the way also access to finance, the democratization of finance, not dealing with big, large banks as a consumer, but really break this down. So this is currently just reflecting a little bit our lineup at Robeco. Now, what makes a theme investable? I'm working in thematics a little bit longer than 20 years. And for us, it is relevant to define a theme. Number one, there needs to be a breadth of a theme, meaning is there enough market cap? Are there enough stocks to invest in? Are there future growth opportunities? Take, for instance, I mentioned space. I love space. I wouldn't say it's a hobby, but I'm curious. I'm interested in what's out there. And I proposed, not at Robeco, but before, I proposed a space theme. And my, at the time, managing partner said, well, Ralf, what do you really invest in there? That's your hobby. But is that viable? There's about 30 stocks. They're usually military stocks. But how do you make money out of that? So that's the second one. The competitive landscape. Does that theme have a sustainable competitive advantage? How do we monetize the theme? With space, it's a nice to have, but how do you monetize that? Just by flying 100 people, millionaires, billionaires to space? That is not a business model. Unless you really harvest meteoroids and need that, whatever mineral you harvest there, then you might have a business case. But right now, a space theme is not monetizable, so to speak, or it doesn't generate really economic profit. Relevant are, where are we in the life cycle of a theme? Now, if you launch an AI theme now, well, guess what? You're probably way behind. It needs to be somewhere in the maturity stage early on, but not too early on. You don't want to invest only in unicorns, because then again, the monetization is tough. So tricky to find, but at the launch of a theme, you need to know where are you in that cycle. And if you combine all that, what makes a theme investable? You've got to be in the middle of that. There needs to be sufficient size of numbers of companies, but also market cap per company. There needs to be a monetization opportunity. What are we really trying to achieve? Also, what problem are we solving with that theme? And can we make money with that? And are there really enough economic profitable companies? You don't want to have only unicorns, because eventually you need to go also to cash flows and profits in this one. It's relatively simple, but keep that in mind, so not everything would pass our test. The other example I usually give, I had a request for a railroad fund. Great theme, but what are you trying to achieve with that? You're first of all linked to all kinds of GDPs. It's just GDP growth. Railroad stocks usually follow GDP growth. You have about 40 stocks worldwide, predominantly in the US, a couple of European equipment providers, and a couple of Brazilians. So you get really a mesh of those three economies GDP linked. Not really a theme. Here you could argue, well, the timing is probably okay. You might find enough stocks, but really, how do you monetize that if GDP comes under pressure, for instance? So what does it lead us to? What are viable, valuable themes that we have today? So look, I'm not telling you anything new, that robotics and automation will take over the less skill-intensive jobs. Artificial intelligence will reduce human error. So these are happening as we speak. Online consumption, to my knowledge, is really close to surpass offline consumption. Digital payment, what I said earlier, democratization of finance, that will become mainstream. Only Germany and to even a little bit lesser extent Switzerland are the countries with cash. I mean, I lived in the US for some time. The US was late in getting rid of checks, but cash is like a luxury there. To my knowledge, Germany, all the criminals come to Germany to blow up the ATMs because you won't find cash anywhere else. So that is happening as we speak. Preventative and personalized healthcare, that will become the norm. It's very slow because there's a lot of lobby in all kinds of fashion for that. The innovative materials and circular use. Also here we have to ensure to make this, to preserve nature at the end of the day for those two areas. Electrification, also relevant for transport mainly, but also energy sources. So that is the as of now, we could argue. There's certain themes that speak to that, digital innovations, we have a global consumer trends product, fintech, healthy living, smart materials, smart energy, circular economy. So that is just a selection of how we map that towards those more broader beliefs. Where does that lead us for the future? Well, why are we there also at a transition? Well, the market seems to have a bigger appetite for more broader themes. And as you see here, in a multipolar world or geopolitical world, so there is a different relevance. Every company on this planet is now impacted by what's going on in geopolitics. I'm not talking too much about that because you all have your own opinion on that, but that requires probably a broadening because every company is impacted with some link to new governments, new regulation, new consumer trends, etc. AI implementation and infrastructure, it is going to happen. I'm not saying that you want to be in the enabler part, enabling AI, but AI has a consequence for all the themes, for instance, that we manage. And I urge my team to look into that. Where are the companies that not necessarily benefit, but that change the way we do? Even in water. Water is such a classic investment theme for decades. Even there, you will have improvements via water flow. AI is playing a role there. We will see changes at and around the workplace. Not just because of AI, but also generational changes, that people job hop, people want to work from home, hybrid, people want to learn, develop more, have to learn, have to reskill, and there's a talent shortage. So that's more pronounced today than, for instance, 10, 15 years ago. So also an area, but also a broader theme. It impacts every company, talent, for instance. And then circular economy, I highlight here, that's not just a sustainable theme, but it is really a belief of certain consumers. For instance, less is more, maybe less choices, how can I reuse, recycle? So also a little bit broader in nature. Keep that maybe in mind, so we have all the dedicated, more narrow themes, but feels like also because of broader market performed differently, investors are looking more into broader themes these days. Okay, now, what is thematic? How are we different here versus classic investing? So of course, I wrote it, we're walking a little bit off the beaten path with that. We look into a higher active share by definition, and the reason is we detach with that also a little bit from the global macro theater. I call it a theater. Every day there's something going on. Drama, comedy, whatever you want to call it. And investors sometimes make the mistake, they just follow everything. It's like a dog just jumping after any kind of toy. Sometimes it's helpful in thematic just to sit back, because not everything that you hear on the daily news is impacting us. So we have a little bit detached a little bit from that. Our investing is mainly in value chains, rather than the classic sectors or regions. And that's where the differentiation kicks in from the classic framework. So we're not looking into markets where overweighing telecoms, or we're going underweight materials, or looking into Japan as interesting, overweighing that 5%. That is not our job. So we're looking into value chains. For instance, water would be one, from not just the consumption, but the production, the filtration, every aspect on that. Similar, for instance, in mobility. Everything from OEMs is under review, but all the way to the end consumer. So different angle. Hence, it is relevant that you always do the feedback loop. What is your variant perception of a stock? I give you one example. Before Robeco, that's now 15 years ago, at my previous job, we launched an agribusiness fund. At that time, fertilizer companies were considered chemical companies. So K+S in Germany is a big fertilizer company. Their own KPIs were linked against a BASF, a Dow Chemical, and others. They were not focusing on agribusiness, although their main business was linked to commodity prices. Again, variant perception, where even the management at the time, when we launched the agri strategy, wasn't aware of really that they should have different KPIs and not just bulk chemical companies, because their product was a chemical, technically, yes, but it was so special. So therefore, always reflecting. Sometimes there's a trick with indices, because they're very artificially collected and put together. So they almost sometimes limit us. If you look at NASDAQ, what companies are in there, that used to be a pure tech index. I mean, you'll find a bunch of retailers in there in today's world. Same with the consumer sector. It used to be just clear consumer staples discretionary. Now this blurs a little bit. There's no clear line. There could be a Netflix. Is that a consumer stock? Is that a tech stock? Yeah, so sometimes they're actually very arbitrarily constructed indices, and we're a little bit agnostic to that. So we'll just look into our theme, what is relevant. So purity of a theme is also interesting. So you got to then be pure and don't deviate too much from what you're actually intending to do and the problem you want to solve. Of course, we tap more into structural growth, mainly through innovation and innovative companies. That's not intended, but it is an inherent bias that we have. So it's sometimes thematics is, yes, thematic is always growth. No, that's just a function of, because if you try to have something innovative, if you try to solve a global problem, you have potentially a tilt to more growth, but it's not growth per se, it's really more a residual of that. And here, very critical for the process, fundamental research. You find it here too, in terms of let the numbers light the way. So we analyzed every company. We're not just going by story, great company, good gut feeling. No, show me the numbers, how that company is relevant. And have then that as a feedback loop to the market. Anything else is just storytelling again. Don't want to go too much here. Relevant sustainability. You know, for Robeco, sustainability is a very big topic, subject. But in thematic, it's a very positive, not just for exclusions, for instance, or whatever you want to do, but it guides us to problems. Sustainability deals mainly with nature, but more often now also with socio-demographic changes and relevancy. So that's our approach. We see sustainability as help identifying problems. It helps us in the process. Again, not necessarily excluding stocks, but think regulatory changes in the auto industry, in any kind of CO2 emissions, whatever. So there's really good help that we get. Trend finding also, better research on companies. And of course, the most important thing for us is it finds more risks that everybody should embed in the analysis of companies already. It should be daily. It shouldn't be a separate issue. It should be embedded in the research that you do. Now, so the thematic situation now is we're, as you learned, differently positioned. And that resulted in temporary headwinds. Number one, value chain investment led us away from sectors and regional exposure. Okay? Innovative companies, they're not always quality growth companies. They're quality companies, but not the definition of quality growth. You might find them rather in the small and medium-sized arena to invest in. That's where the interesting thematic companies are. Theme purity is tough. With theme purity, it's tough to always outperform the markets because you're really purely doing one theme. You don't want to dilute yourself too much. You don't want to be mirroring a global MSCI just because that is easy to do. No, you got to stick to the purity. And we have a very dedicated process at Robeco, so it's not like every day you can enter a different stock or something into your portfolio. That has to pass a test how thematic relevant that is. Short-termism is not really helpful in volatile markets. So investors, instead of having a 3 to 5 year time horizons, of course, just look at the next quarter. Or in thematic investing, as you can tell, if it's more volatile, you're not investing in regions, so you got to deal with the volatility. Do look at it a little bit longer than just a year. And sustainability also seems to be less attractive right now, at least if you read the headlines in the media. But that will come back. It's not solved or over. It's just, for me, it could be we're actually in a low of sustainable sentiment. The US was always different, of course. It was always, depending on if you live on the coastlines or in the inner part of the country. But I am a firm believer that we haven't solved the sustainability issues, and that will come back. So here, a little bit of the proof, how the investing is different in thematics. What we did here is we show you the European thematic funds that are out there and listed all the MSCI sectors in order. And then we did the comparison to MSCI Acqui, so the world index. And as you see, industrials seem to be a significant overweight of all the funds, all the thematic funds in Europe combined. And here's the big performance delta. So first of all, industrials didn't perform that well over the last 5 years, but what performed was information technology. And you see, on average, a clear underweight in this one. You also see healthcare being overweight due to several healthcare funds and etc. So they are, again, also a very defensive segment that hasn't really performed over the last at least 5 years. The rest, a little bit level. Financials, yeah, also hasn't been a very thematic in the past. Picked up lately, of course, because of fintech as a relevant theme. The rest, relatively evenly distributed: consumer staples, services, etc. So not much. But number one, so that's not. We're not in thematics, never mirroring the market. And I gave you some examples how we look into the value chain approach, for instance, in thematic, in our global consumer trend strategy. That's not purely discretionary or consumer staples. You see anything else here from IT is in there, com services, very broad. Same with water. That's assuming, yes, the bulk is industrials. That's where the water stocks are in there, but it's broader. The value chain is broader, includes a couple of healthcare companies, testing companies, a couple of conglomerates. Yeah, so it's never that pure. Keep that in mind. Now, we experienced the synchronization of the markets. That wasn't helpful. Here you have the stock market concentration, for instance, in the US, and there was most pronounced versus Europe. But in 2023, the top 10 companies made up 27% of the market concentration. Even the top stock or top 3, you get to 6 and 15. That is historically close to a high. And not to that extent in Europe. But what you see then on the right, here's the consequence, is you see that green line is the stock small cap index there, followed by, and we have the mid cap in the purple. That is the Russell 2000 in the US, also mid cap. So mid caps all underperformed because everything was concentrated in larger companies, and here S&P, very concentrated in tech. So these 27% here is mainly tech names. The Magnificent Seven. But there's hope, as you see. This line of all the small mid-caps, pretty steady. Europe steady. Here, by the way, the gray one at Switzerland. That's the Swiss market. Nice combination of both blue chips, small companies. But you see, something is changing here. There seems to be a reversion to the mean more lately. And I believe that has more legs to go. Sorry. I found this interesting. That's what Barclays did. It gives you a good summary of what worked last year in thematic, what not. The size of the bubbles gives you the number of funds in that category. For instance, fintech, that is probably close to 200 funds in that whole category, maybe a little bit less. Bigger ones are broad thematic, that's 400 funds. And it shows you the 1-year return, and it shows you pretty much the net assets that are managed in that category. The European average was about, sorry, this is all in USD, so I had to use the S. So we're roughly here 20% returns for the US in USD. Oops, cannot do this in a straight line, sorry about that. Let's go back. So everything around above here outperformed. Space, you know my comments on that. Fintech, yes. Artificial intelligence, yes. And then multiple tech themes. Everything else underperformed. And pretty sizable as well. So you see energy transition on the right. That's the largest category with net assets over 75 billion, also the biggest amount of funds. That was a tough time for thematics, unless you were invested in AI. I mean, everything underperformed MSCI, everything else underperformed. It's a reflection of the synchronized market that I showed you earlier. There weren't many themes to hide. When you had decent performance, 10% here, cloud computing, cybersecurity, consumer did fairly well, but it didn't live up with the market. What else happened? The synchronization in general is also a US phenomenon. Everybody jumped to the US. The US hegemony was pronounced. You see here pretty much the performance of Europe versus MSCI, MSCI Europe versus MSCI US. Significant underperformance pretty much for the last 20 years, more pronounced in the last 10 years. But you see a turnaround there at the end, last 6 months, I would say. And then turning to emerging markets also where our themes guide us too, because we're unconstrained. We look into every value chain also in the world. That's emerging market versus developed market on the right. That's just over the past few years, massive underperformance. Also that seems to turn around, mainly for valuation reasons. And then what you don't want is volatility, because in volatile times, markets revert to the mean. Then it's a luxury to have thematic, because everybody's like, oh my God, I got to be equal weight Japan, I got to equal weight oil. Everybody has then no opinion on something. So you see the spikes here. That was the dot-com bubble was earlier. That was in this phase here. That was the financial crisis. COVID here, and that's lately the volatility level shot up to above 60. That is usually not a good scenario for thematic investing on that day or that week. So what we're urge is to have a longer-term view, not just look at 1 quarter, but the longer time, because that's why I picked that sandcastle. You always feel in thematic investing, you have one big VIX event for a week, and everything is off. Nobody cares about energy transition, nobody cares about mobility anymore, but that's just really too short-term thinking and too short-lived. One word on sustainability. Because as I said, sustainability leads us also to our ideas and themes. On the left, you see European ESG funds over the last, what is that now, 7 years, 6 years. So in dark blue, you find the ESG funds and the flows. Pretty much steadily positive, flat 2022, 23 last year, slightly down by 12 billion. Not too bad compared to all the other European non-ESG funds that had also massive outflows, very consistently. So that doesn't look too bad, but more important, look at the right, and I didn't address that yet. That is the share of active ESG funds, or flows active ESG funds versus passive ESG funds. So the passive ones actually did fairly well, still increased last year, but active ESG funds really saw the outflows. So ESG per se wasn't really suffering that much last year, but active versus passive is the discussion. And thematic is an active category. You cannot run a thematic portfolio being passive. Because you have to do as I told you at the beginning, you have to have the governance around it. You have to have the investment process around it, the reflection value. So there needs to be pretty much constant changes, or at least one needs to be on alert rather than just reshuffling as an ETF does passively once a quarter, or how often you want to do it. All right, to conclude, from my perspective, the tariff fights won't stop. This will be ongoing. Tonight at 10 o'clock, you get the result of the Liberation Day, or whatever Trump calls it. So we'll see. I don't have a view. I mean, I have a view. I think there will be tariffs announced, but no idea if they're worse or better than the market expects. But that's going to stay. That's not going to go away. And you see inflation will go up. And you will most likely see that Europe is a beneficiary of that whole scenario. Because everybody was in the US invested. The hegemony was there already for the last 20 years. So I think the safe haven US has been challenged. AI is also there to stay. That's not going away. That's unlike the dot-com bubble that we saw. You have water needs for AI. You have energy that is required. Mobility will be enhanced with AI. Finance will be even more democratized. Healthcare will be discovered much faster than we think right now. So it doesn't take decades now to find the right molecules. That can be done. And the consumer will be much more efficient with the help of AI. So that's going to stay. So therefore, the themes will look into all the different changes that is coming via artificial intelligence. Why would passive go back to more active? Well, valuation. If everybody jumps into the same stocks, passive via ETFs, billion into that, eventually there's a discrepancy in valuation, and you probably see that leveling also with small and mid-cap equities who look attractive against some of the large caps. And then very simple. I learned one thing in investing: follow the money. Has been true definitely for the last decade. That's why the US was predominant, because all the money went there, all the rescue packages, COVID, infrastructure packages, that's where the money is. Guess what? We have that in Europe now. So if you keep it simple, follow the money. It's not all going into defense, because we only have 5 defense companies in Europe. It will spread out across other sectors, so it's relatively simple. So at least that relative trade should come. Also great if there's tariffs and trade barriers. You need to rethink supply chains. And in the worst case, you duplicate the supply chain. If the US has a supply chain, now Europe has to create a supply chain. That's not bad for investing. I mean, it's a little bit the circular argument from what I said earlier. That's where the money goes, a duplication of supply chains. Yeah, and then more technical, historically, Thematic was always treated more as a satellite and a little bit storytelling and one size fits all. I think that's and a nice to have. I think that could change. Themes could become more core. They will be broader, probably, and they will be solution-oriented. So don't write off the whole thematic category. The themes already start to benefit from the desynchronized markets. Desynchronized, i.e. broadening, that was the title of the subject here. And the structural demand is not going away. And think rather long-term structural than short-term cyclical trading. And with that, I'm sure there's a bunch of questions. If not, I would be surprised. Oh, thank you.
Okay, you are saying that themes are becoming core in a well-diversified portfolio. Do you mean multi-thematic themes or single themes? I guess single themes will stay a satellite.
That is correct, yeah. But I meant more the multi-theme. There's different forms and facets of a multi-theme. You just do a best of, or what I said earlier, broader themes. Themes that impact every single company. Be it in the work environment, the circular economy seems to have a broader narrative. Think AI, implication and implementation of AI impacts pretty much every company. Maybe a water utility, what I used as an example, less so than, I don't know, a media company. So, but yes, in general, I fully agree that the narrow themes will stay satellite, unless you have to do an eclectic collection to really reduce the tracking error, and hence multi-thematic. And I believe there will be more solutions that will be asked for by clients. Reducing with the multi-theme, maybe reducing a tracking error and using quant tools and all that. So that's correct statement. So the single themes stay satellite. That's correct. Yes.
Well, first of all, thanks for your presentation. My question is regarding, you talked about timing, which probably is quite tricky. How do you have any rules when you can say, well, the theme is visible, we see the structure, so that you're not too early but not too late?
Yes and no. I mean, we have a little help at Robeco also. We have a quant department that picks up signals. So they scan and screen the market, and if comments in quarterly results, for instance, come up more often than, someone thinks about it. That is almost too late. And the trick now is in my view, it's not like 20 years ago, every theme has been discussed. People are really innovative, and they become more granular, and they become this and that. So think it through, but that's exactly that time frame between if you have a brand new idea, that to see the consequence in the market, and that's what I mean. You got to come up with milestones in your launch of a theme. What is the milestone of whatever the EV transition? You got to have a certain amount in your own model of EV or hybrid cars, whatever, and track that. Where are we? Is that what we expect? Are we slower? Are we faster? That is crucial in the process. Always reflect, even at the beginning. So you might want to wait with launching a theme. And it was actually a question by the team. We have 4 or 5 new ideas that were floating around. And the smartest question was like, well, should we really launch them all at the same time? Is one more urgent than the other? And the answer is yes. I mean, everything AI related probably is urgent, not NVIDIA, not the enablers, but the impact within our themes already will be visible over the next 2-3 years. So that is urgent. Others could take longer. I use the example of the change in the workplace. That probably is early on, but it's also not an if, it's when. But therefore, you always have to have the process in place. What are you measuring this against? A certain number of, again, autonomous cars driving around in certain states to see the acceptability, etc. So, but yeah, and it's becoming trickier to find themes too. Because then you're, again, you have a variant perception, then you have almost a second derivative of a variant perception, and you don't want to be too crazy about it.
Thank you. So this was the third point of your slide number 3, the constant monitoring you're just talking about. I want to challenge the idea of broad thematic strategies. Isn't that a nonsense, actually? Because thematic means we deviate from mainstream indices because we have a conviction of something. And then if you say, well, actually, we are not really convicted, that's why we broaden the team. Isn't that a bit paradox if you have it's like the democratization of private equity, because then you destroy actually characteristics of something.
Fair point. From my experience, that angle is more wholesale angle. Wholesale is fully aware of and wants to have nuanced new themes. If you move to the institutional side, coming back to the broader themes, there it is actually appreciated. It's like a different allocation. Usually, let's say, some of the institutional have like an index tracker, that they have a more value-oriented, and they look into a theme, because the process for the multi-theme is not different than for the others. We still look for stocks and companies with a variant perception, where there is an underestimation of that theme. I gave you the K plus S fertilizer versus chemical one. That was an underappreciation because the stock was valued like a chemical company. It didn't include at the time the scarcity that we had in food supply for 5-6 years. So you always look for that, and that's for all the stocks. But I agree, yes, if you want to have an interesting theme, brand new, yes, as an investor, you should take the risk. But sometimes it takes also more education, because from launching a theme and hand-holding also clients, you got to then exactly say what you do, that you only have that you have an active share of 95% or whatever, huge tracking area, that you're not mirroring MSCI. But we feel like there's more the need, and not necessarily multi-theme covering the whole world, but combining different themes, combining more the nature-based themes, and finding solutions there.
But I think there is two things mixed now, because the previous question I understood was about the number of themes, and I stressed on the breadth of the team. So these are two different things.
Yeah.
So the number is about risk diversification.
Yeah.
But if a team is defined very broad, because we think, well, water could be a topic in the future, but nothing more specialized, then
that should stay
vague.
Yeah.
So I meant the breadth of a team, not the number of narrow teams.
Well, the breadth of the theme should be, well, it depends on what you try to do. Historically, it used to be you have mobility. So then you probably less likely invest in financials. Could be maybe energy transition, could be tech a little bit, but there's always some. But now with the trends that we discover, with geopolitics, with AI, with the workplace, they are by definition broader themes. And these are the final barriers, I would say, in thematic investing, because everything else people discover. Just look at some US websites, the coffee theme, the whatever fast food restaurant theme. So you can make up every kind of basket that you want. But the bigger ones, nobody tackled, because that requires more work. You got to show me the numbers if you talk about the change in the workplace. Get that data, good luck, because you got to talk to each individual company how they are doing their learning and development program. So you won't get that. That's why nobody tackled that. Same with AI. It's a buzzword. Nobody has done the work really to quantify the impact of AI elsewhere, in media, in material science. I mean, we're at the beginning of doing that, and so that's what I more meant, because all the single themes, yes, they stay the single themes, but the demand and where the problems lie right now, they're broader. They're world problems and impact more companies than just a small selection in water. I know that's not fully answering your question, but in general, I agree. You don't want to mirror an MSCI. You want to have that theme purity always running up. Just one example for that work theme, where we look into why is it commercially relevant and why has nobody looked into that. So it is relevant because 20 to 40% of costs of companies is staff. If you get that wrong, that's an issue. If you get that right, you have a competitive edge. But that variant perception per company, nobody has dared to do yet. And that's where the low-hanging fruits in thematic were discovered in one way or the other. But now the tough part comes, where you cannot click on a Bloomberg screen saying, okay, these are the 20 stocks, I launch an ETF, I rebalance, that's once a quarter done. Any more questions? I don't know what we're doing time-wise, 2 more minutes, 3 more minutes.
If I have another question then. From all the products, which one are you most bullish on?
That's an unfair question.
I know.
Good question, though. No, I would say what's relevant in the market now is everything that deals with financials and fintech, because financials historically was not a theme. That's a sector. And it only lately became relevant that you include technology, AI, digital assets. So there is many more things. It's an instant generational shift. I banked with, I can tell because I'm German originally, with Deutsche Bank, and then in the US with JP. I never dealt with them. I had no interaction with both of them, neither in Germany nor here. But now I feel like with fintech, you actually have much more interaction. I not necessarily subscribe to the gamification of that, but it's much easier. So I think there is more to come, because there's also more money that people shift from broader financial concept of a universal bank to others. So that I would subscribe to. Others, of course, what I mentioned, from the themes that we do, digital innovation not only deals with the enablers of AI, but also the next derivative. So that is crucial that you not go into the Max 7, because that trade arguably has played out. People heard of it. I'm not judging the valuation of that, but that's not new. But really the next step, the derivative. Where is the impact in industrial names, in consumer names, and as I said, in financial? So probably just 2 to highlight.
Yeah, thank you. Any last question? If not, you can also find this little card on the chair. This is with some QR codes. You can find more information about our products. You can find our contact information. Please let us know if any question come up later on. If not, then thank you for attending. I hope it was insightful for you. And if you have other questions, we are still around downstairs with the drinks, so let us know. Otherwise, I wish you now a nice evening, and thanks again.
Finally, the mandatory risk warning. The content of this episode is for general information only and is not a recommendation to buy or sell any financial products. All information is supplied without guarantee, and this is not an investment advisory.